Good afternoon, everyone. Life insurance is always sold but never bought. A very apt statement for the current selling trend in the industry. Dear Indians, we did celebrate the 74th Independence Day recently. The irony of today's India is we clinched India back from the British, but the mis-sellers have taken charge to loot Indians. I feel sad today to bring to your notice, while the regulatory is trying the best to education and educate India on the need for life insurance, there are a bunch of mis-sellers from the industry and across verticals who are responsible for your losses, tears and pains. You know why? They agreed to make money and dissipate you from your aspired goals and dreams. That's actually superseding than the real financial goal helping. As I run you through the insights from the life insurance industry, I'm sure all of you would agree there needs a tremendous amount of education on the need for life insurance and the need to change the selling approach from being transactional to transformational and most important to conservative selling approach. Well, should we blame the not so robust system and checking mechanisms from the regulatory, or should we hold the life insurance companies along the rigid as well the most mis-selling agents and advisors? Over the past decade, a very large number of unsuspecting investors have fallen prey to the dubious sales tactics. Unfortunately, mis-selling has become synonymous with the industry. What's more, the losses accrued to clients through monies foregone due to lapsation or for being misguided or missold and of hefty upfront brokerages have filled the coffers of either the insurers themselves or the trustee agents and advisors. Having spent around 15 years in the life insurance industry, led the team at different levels with around 20 years in the world of BFSI, who else can actually guide you better than me? I have contemplated educating every Indian on the need for life insurance as well to save Indians from the greedy lot of most life insurance advisors and employees who are known to get the sale done but through mis-selling as well from the misleading flyers and advertisements. I take this opportunity to thank each one of you for making time to watch this video of education. I also urge Insurance Regulatory Development Authority and all the 24 life insurance companies to take this attempt of mine serious to ensure corrective checks and measures across your selling segments and no misguiding to innocent customers and no mis-selling. Remember, advisors, your one intentional wrong move can ruin the entire dreams of a family. I promise each one of you, the mis-sellers today, that I will make you a responsible citizen. Note, my war is not against life insurance, but I am against the way life insurance is sold. My name is Anand, an Indian and on a mission to save Indians from the world of most mis-sellers from the life insurance industry. Before we unveil the dark side of mis-selling in the life insurance industry, request you to hit the subscribe button and turn on the bell icon for future updates and videos. Friends, here I am sharing with you some of the top mis-selling statements are the way your advisors actually guiding you wrong. Number one, they would tell you it is wise to withdraw money from your unit-linked insurance plan and park money in this new guaranteed plan. They would even tell you, sir, markets are very volatile. I suggest you surrender this plan, surrender this existing unit-linked insurance plan and go for a non-participating solution, sir. We give you guarantee. Sir, this is the best product which offers you a guarantee of 12%. You know what? They would even show you the past performance. While the past performance cannot give you an assurance in terms of the future. There are some people who would come and even tell you, sir, you know what? If you're not happy with this product, close this within 15 days. And we offer you specific only to you something called free look period, sir, and get all your money back. And note, most important, this is a tax saving time. Save taxes today and you can actually withdraw the money later, completely tax free. They are misusing the 15 days free look. There are some who would even tell you, sir, this is the only guaranteed product which helps you to beat inflation. Imagine they're offering you a traditional endowment plan, and none of these traditional endowment plans can give you an IRR or an internal rate of return more than 5.5, at the most, on a best of best scenario around 5.85%. Do you think this beats inflation? There are some who would even tell you, sir, with loans it's mandatory, you must take a policy and it's one time, you don't have to pay. We will adjust this against your disbursement. That's the case. What do you say about these statements? Especially for those agriculturists or the farmers and someone who is not having any kind of knowledge about insurance. You know how actually they are being duped? There are cases where insurance agents have told them with Kisan credit card comes insurance, and they put off the size of the money into an insurance policy. There are some cases where people say your ULIP offers you flexibility like a bank for withdrawal anytime. It's again misselling. Government guarantee on traditional products. 8 to 10% guarantee are the best returns compared to even FD. Fixed deposit comparisons we do. I have a lot of such flyers, and of course you get to see those kind of flyers coming to you. Mutual funds, no guarantee, sir, but insurance, all plans offers you a guarantee. Sir, among you can take as much loan with this traditional plan. This becomes a collateral for you. Sir, among surrender when you need and take all the money with interest. And you know what? The innocents, when they speak about the child education, the first thing which comes out of any agent mouth is, sir, go for a child money back plan. And there are some cases, there are some products in the past that I was shocked to note where the insured was actually the child, but the beneficiary was actually the parent. You tell me, who is closer to death, whether the parent or the child? Beware, my friends, please don't get carried away. And the core purpose of this video is to educate you and sensitize each one of you on the reality check of these respective missellers. In fact, lot many sellers ask me, why this initiative? Well, the industry is panic on this never before initiative, that's a matter of fact. And here are the key objectives. Number one, it's my war against misselling, and a first of its kind an initiative around the globe to guide the life insurance prospects, that is you. Number two, it's a never before mission to change the perspectives of the customer and also the life insurance companies. And three, and most important, I did everything possible to educate the employees when I was actually on the rolls with the corporate. And post witnessing as many mis-selling incidents, I have decided to guide India on the possibility of getting misguided if they don't understand the nuances of life insurance selling. This slide unveils the dark side of the life insurance industry and the impact of mis-selling. To note, even the government of India is aware, and I have urged the Insurance Regulatory Development Authority that all insurance companies in India to start publishing on the investor laws due to mis-selling. But till date, I'm sorry, we don't get to see such kind of reports barring the kind of complaints which gets registered, which is actually in lakhs. IRDAI should wake up before it's too late, as they're all well aware investors don't lose out because of insurance products, but they lose out because of mis-selling and bad experiences. I'm sure that most of you must have had bad experiences. Not only that, even RBI reiterates how mis-selling can destabilize the financials and impact the continuation of the policies. Does it mean that the people doesn't know? The policymakers today do not know. They are well aware. But mis-selling continues. What is shocking is why IRDA is not being able to take stringent actions on the mis-sellers, are companies having highest number of such cases. Friends, during the course of my discussion, I shall share insights from three different surveys to share with you some shocking revelations. Number one is from the PwC India, second survey is of the IRDA, and the third survey which I have personally conducted. Now, sharing here with an eye opener of the PwC India's Insurance Technology Survey, which was conducted the year 2019. The slide reveals the fact that for a product like life insurance, customers still prefer active human interface to understand the nuances of all the life insurance the products, especially at the pre-purchase and claim stages. Now, what takes me by surprise is number one, most life insurance companies till date do not have a robust learning platform for their employees and stakeholders to help build competencies and boost the skill sets. Second and most important, there are hardly few programs around behavioral aspects. Third, decrease in training expenses in another worry is actually another worry. And fourth and most important, more of target driven drive which happens today, not the learning driven. Tell me, with this level of low engagement, how could we expect sellers to embrace new learning and updates? So, who is responsible for the mis-selling? When the foundation is not strong, an advisor will find ways to get the contract signed, and during the course of time, most end up actually mis-selling. In case some of you have questions around, how do we classify mis-selling? In this slide, I have classified the mis-selling into 6 different buckets. Number one, it is competition based. What does it mean? Most sellers do a bad mouth on the competition and are insecure since they wouldn't know much about the competition. Second, return based mis-selling. Mis-sellers just to clear the targets and earn great revenue end up false promising each one of you on the returns, or they would show the past performance of a specific fund, little that these mis-sellers know or think about how this wrong suggestion could impact your dreams and aspirations, because you're the breadwinner. And note, your dependents might suffer if you end up buying the products from these kind of mis-sellers. Third, trend based. Most advisors end up offering the customers a product saying others too are buying the same product, sir or ma'am. They would do this since the top management would be either driving the flavor of the month or product of the month. You must have come across this visiting to some branches of a bank, or probably some advisors talking to you, sir, term insurance is a must. That's great. But how about a cancer insurance? Before you offer a traditional, or rather, you talk about a standalone term insurance plan, you end up a cancer insurance plan. Or probably some customers, some advisors who would be even talking to you about a money back plan or a specific product which is launched only for that month which you are unaware. Fourth, revenue based. The advisor loves to push a high revenue product and most rarely consider the actual goals of you or your risk appetite. Sad to note, most advisors doesn't believe in 360-degree approach to financial planning. Fifth, target or pressure based. An advisor or an employee succumbs to the target or the pressure from the company and the seniors. And there's a high possibility they would end up again mis-selling you. Be careful. Sixth, comparison based. Comparison between life insurance company and an investment product probably could be, it's not even an apple to apple comparison. How do you like someone comparing insurance with mutual funds? This is another type of mis-selling. Though life insurance and any other investment product comparison is not an apple to apple comparison. As you're all aware, the purpose of buying a life insurance is to enhance family financial security. Here comes the second survey I will share. This is from IRDAI itself. A primary survey of households was undertaken in 29 major states rather, and union territories, 151 districts, and in each selected village, approximately 100 households were chosen by the equal probability sampling approach. Note, this is across both insured and uninsured category. Now here are some interesting insights. See this, High percentage of insured households are self-employed to the extent of approximately 52%, and in that 9.67% were in agriculture and 32%, around you say 32.28% from the non-agriculture work. And the second category is the salaried, comprising of 34% and engaged labor comprising less than 13%. As regards uninsured household, approximately 38% belong to the labor force. You can imagine, 38% labor force are they're not insured at all, of which 5% in agriculture labor and 33% in casual labor. The second, the 41% are self-employed, comprising 16.2% in agriculture. Those are not insured at all, and 24.81% in non-agriculture work. And only on fifth or salary, one fifth are salaried or even or regular wages. This is really, really shocking. So here are some of the interesting excerpts from the IRDAI survey. And this slide is actually an eye-opener on what most Indians feel about life insurance. Have a look at it. Have a look at this slide. About 38.3% of the illiterate Indians under the uninsured category are not sure why life insurance. Why should they buy? And over 33% of the insured people are still not sure why they bought life insurance. A clear insight on lack of education on life insurance and the way it is actually sold. Second insight, over 7.9% of the people, uninsured population rather, who did participate in the survey have no confidence and trust in the insurance. Does it mean they had an influence, some bad experience? And it's also very clear life insurance companies failed in educating the uninsured for the need for life insurance. Over 25% feel they can survive without life insurance, and 56% feel the life insurance policies are too expensive. Third insight, across insured and uninsured segments, there is a high dependency on the agents or the advisors, and it's whooping almost 70% if you have a look at this slide under the insured households and 45% under the uninsured segment. So, how it's impacting the economy? Number one, unskilled agent or advisor end up offering wrong products with the greed of making more commission. Number two, the same results in policy surrenders or lapsation impacting the buyer's goals and aspirations. And number three, the bad experience can as well influence the would-be prospects too. It is clear a product like life insurance demands more human interface, but most life insurance companies and their L&D teams are busy driving SP licensing or the agent licensing and not giving importance to the learning and development of their agents and advisors. The fourth insight. This slide speaks on the industry so far, how it is failed to leverage on the mass media to educate Indians on life insurance. Check. Relatives, friends, and neighbors rank the highest as a source of information across insured and uninsured category. A clear indication there is a lot the life insurance companies should do to strengthen the knowledge levels of their employees and advisors, and it's a collective failure, in my view, to influence without authority. Insurance companies have failed today. Hope we wake up. Also note, there is a high possibility of decisions getting influenced by relatives, friends and neighbors in case they had some kind of bad experience. The fifth insight, it's a clear indicator of how the life insurance policies are sold today, especially among the illiterates, that one can cancel their policy within 15 days period. Have a look at the statistics, and there's a survey except from the IRDAI. The awareness on the 15 days free look is so high. There is a high possibility, indirectly, these advisors might even encourage the money laundering too. So beware. insight. Proportion of policyholders among females are very less. Don't you think it needs a lot of attention, or this segment need to be given a tremendous amount of the time and efforts to educate them? What in case there's an absence of the breadwinner? God forbid something happens to the breadwinner. If the female folk lose, or rather they lack the education, what do you think could happen to their family, their dependents, the children? Insurance companies to focus on encouraging the decision makers to involve, most important, their spouses, and female specific campaigns rather than target specific. Ladies and gentlemen, with over 11,279 life insurance company branches, 6,347 belong to the private companies and 4,932 are of LIC. What is shocking here is, note the well thought strategy of LIC in terms of opening the new branches compared to unjustified approach of most of the private players end up closing their branches. I've shown you the statistics from 2008 till up to 2009, 2019. Does it indicate few decision makers are either hasty on budgets or it is intentional? It's not a good sign. Is IRDAI questioning on this? Here comes the third survey, which I have personally conducted and had asked a few critical questions to the participants. The outcome is actually an eye-opener. 90% of the participants still feel they buy life insurance because of an obligation or by force. 38% prefer consulting their families. Till date, rarely I find an advisor being so competent who could help the family take the decision together. 24% of them still feel they have no idea on what is the claim settlement is all about and its impact. 30% are not aware what is the right amount of insurance they should buy. 35% have had an experience of an advisor offering them something other than what actually they need. And 30% are not sure they must address their protection requirement first. This slide is again an eye-opener in continuation with my survey. 22% of the participants are still unaware what actually they have bought. A clear bad sale example. 38% were never told or explained what is in the illustration copy. And most customers are advised by their agents even today during the confirmation or the verification call before the policy issuance. They are guided to say, we have understood everything. 68% shared they were never explained or offered a ULIP basis the risk appetite and risk profiling is never done. Life insurance companies, please wake up. 54% were promised of guarantee from unit-linked insurance plans. Can you imagine? Another case of misselling. 22% do not even know the basics or the basic difference between a term insurance and an endowment plan, and 41% are clueless what is the right amount of life insurance. Regulatory. Time to sensitize or penalize these culprits who are misguiding the customers. Now watch the duration of discussion of an agent or an advisor with their individual prospect or the customer. The people, those who participated in the survey, they said it varied between an average of 17 minutes to 45 minutes maximum and not more than that. Do you think a person can be educated within 17 minutes all about a life insurance? I've spent almost 15 years, even today I'm learning, my friends. Now check the advisor rating by the customers in the scale of 1 to 10. An advisor has been rated only 6. I'm keen to understand what are the decision makers and the learning and development departments of these life insurance companies doing today. Should I blame the advisor, or is the life insurance companies responsible for this? So, from the takeaways so far we must have had from the three different surveys I had spoken to you or shared with you, and the key insights. Here are my suggestions to the Insurance Regulatory Development Authority of India and to all the respective life insurance companies in the interest of the customers if in case you expect a healthy business. Number one, if in case the government of India expects a great life insurance or the insurance penetration, I recommend, I urge these following initiatives to be implemented at the earliest. Number one, internal rate of return for all the traditional products should be there in the illustration. It will help you and it help the customers having a better transparency, and it builds trust, avoids the misselling and wrong depiction of returns. Second, mandated customer satisfaction survey at the end of each sale and the survey linked to IRDAI weekly report to be published by IRDAI, the regulatory in the charts. Third, insurance awareness programs in the lines of IAPs of mutual fund houses. Mutual fund houses today, they conduct something called investor awareness programs. Friends, you know what? They keep aside approximately around 0.2 to 0.3% of the asset under management only for educating the customers. What are the insurance companies doing? Life insurance companies to set aside a separate budget from their AUM or the asset under management for investor awareness program in the lines of mutual fund houses, which I've told you. Hefty fines from the regulatory if in case any life insurance company deviates. Insurance companies ranking basis the customer satisfaction survey or the ratings and claim settlement, but not on the premium sourced. So far I have spoken to you how the premiums get sourced. Mandated e-learning programs for all the agents and bankers post licensing, specific to holistic approach on the financial planning from month 1, rather month 0 to month 3, and see the changes, my friends. The next, what else actually helps the insurance companies, the penetration? Life insurance companies to sponsor and mandate quarterly NCFM certifications for all the employees. It's both on basics and dealer modules. Regulatory to introduce quarterly audits on customer satisfaction surveys. Exclusive mobile app for the customer complaints and a dashboard publication company-wise chart depiction which you can do like the way the government of India does. Why can't the regulatory keep showing this kind of charts or regular updates with daily updates and hefty fines to the companies with highest number of complaints? You can introduce something called complaint meter also, probably the title of these dashboards. Mobile app by IRDAI, the regulatory must to create awareness on life and other insurance products at regular intervals in major languages. Mostly the leaflets or the pamphlets you call them, they come in either Hindi or the English. But of course, IRDAI is making some amount of efforts, but still I recommend it has to be aggressive. A neutral approach to insurance weekly commercials across mass media and vernacular. It has to be in the local language. For example, now I'm talking to you all in English. But how about the people, those who speak Hindi? Obviously, I must translate this presentation to Hindi too. Spread of first year commission. This is actually the most dangerous thing which is happening now. Upfront commissions are paid to the agents. Why don't we spread this across? At least for 5 to 6 years or probably the policy term and see the changes. Next, the learning and development department across insurance verticals to focus on competency building for both internal and external stakeholders and automate the licensing piece. Learning and development departments across insurance verticals to have a dotted reporting to regulatory on the progress submission on skill building. Every insurance company has A part of the CSR activity must visit colleges and educate students on life insurance products not exceeding 6 hours probably, spread over 3 days or as per the institute norms. Quarterly mandated webinar by each CEO of an insurance company addressing their customers state-wise. Questions to be taken in the separate login platforms. Of course, technology is wide angle today. It's unprecedented. You guys know the better. Customer awareness on insurance products, the process, the guidelines, fine prints to reach customers on their registered email IDs or snippets via SMS alerts at regular intervals. So, what else the regulatory and the life insurance companies must do to enhance the trust, to increase the insurance penetration? Exclusive case studies across all ages and scenarios to depict in the life insurance company websites. Probably you can even set aside some budgets for animation. 2. Budget allocation for rural education. Life insurance companies to simplify all the product brochures, and most important, they have to be in the local language. Quarterly update on complaints and ranking across the industry should be available to the common customer via link. Quarterly meet with the insurance companies, CEOs and ideation. What I mean, why can't all the respective CEOs of different life insurance companies come together once in every quarter and ideate on the best practices? Post you implement, watch the difference. Keep aside the competition, my friends. Think about India. Think about Indians. Think about innocents. Think about those who are still yet to be insured. They are losing trust because we are misselling majorly. 9 a.m. to 9 p.m. call center to address customer complaints. On the TAT, actually, the turnaround time should exceed more than 2 days. All employees of insurance companies must clear one more additional test from IRDAI post the induction of these employees, and the minimum passing marks has to be 80%. Well, there should be even surprise complaints checks once every quarter by the team IRDAI. I'm sure it was practiced, and in case you're practicing, it's great. Hefty fines for non-adherent companies on the SOPs from the IRDAI. Mandated CSR activity on the insurance education across rural markets, which I have told you once again, I'm reiterating. Financial planning, caselets based exam for all life insurance selling professionals. Today we train them on the products, that too only of that insurance company products, and beyond that they don't know anything. Most of them don't know anything. If they do not know anything about the financial markets, if they do not understand the competition, you know what is next. Simplified videos spread of all the products, which includes the features and benefits across company websites. Of course, IRDA has few, the holistic the videos, but recently that I had to correct by sending an email. And of course, even I think that in case I'm not wrong, I posted the comment in the chat box itself to correct on the unique product. So we need to double check once again, keep updating the videos. Otherwise, again, that becomes a misguiding. Movie theaters to depict the importance of insurance. Why not the movie theaters to have, the small snippets coming on the insurance, and without insurance, the impact. We show the cigarettes, we show every other products over there. Why can't we show, some small snippets on insurance? Consistent mass media approach and a certificate of insurance, a small module from IRDA in the lines of NSC for all the advisors to be conducted and certified at regular intervals. Next and most important, what else actually helps for a better insurance penetration? While my suggestions continue, here is the last piece of the presentation. The CIOs, the Chief Investment Officers, to present the fund performance and the strategy implemented. Well, do you think they don't do? They do, but not at regular intervals. I'm talking about a month a video uploading the life insurance company website, which has never happened anywhere in the industry or around the world. And this can be part of the public disclosure too. Watch the difference. Mandated simplified fund fact sheets to reach all customers every month in the vernacular of the state over email. Regulatory to set guidelines on discretionary expenses of the life insurance companies if there is a possibility, probability, or a plausibility. And in case that you think that you can have a control, especially on the bloated R&R functions and foreign trips, which will definitely help justify the policyholders' money. Cross-learning opportunities between SEBI and the IRDA to work jointly to bring the financial awareness and continued education. So this is my request not only to the IRDA but also to both SEBI and IRDA together and to the government of India. Implement this and you would see people falling in place, people coming to you, financial awareness, and of course you don't have to really worry about the penetration in terms of insurance. That takes care by default. Remember, the core objective so far that I have spoken all about the need for financial education, financial literacy, and in the interest of the innocent people. Request you, please do not misguide them. Request you not to play around on the policyholders' money. And request you not to do misselling. Remember, you're playing on the goals and sentiments of someone. You can put this family into the streets if you continue to sell like this. I hope you will change from today. And I hope IRDA or someone who's watching this video of mine representing the life insurance company is going to change their approach to selling. And I hope all you customers, before you buy the next time, you're going to ask one common question to every seller. What is my internal rate of return? Can I have the transparency? What are the charges? Where is the risk profiler? Do you think this product suits me? And ensure that they know not only their product, challenge them even with the competition. By doing this, you are building a better tomorrow. So thank you all once again for your time. If you found this video was helpful in educating each one of you, not only from the customer perspective, but even from the economy perspective. If only the life insurance companies could implement my suggestions and the regulatory becomes more serious, you're going to watch the changes. You're going to see awareness. You're going to see people liking insurance. You're going to see people understand the need for life insurance. We need to really bring in the competency. We need to pay attention on the customer satisfaction, not on the targets. Thank you once again. Keep sharing this video and let this go viral across all the insurance agents. And let them have the fear in the mind. If not anyone, Anand is watching them. And if you have any query, you're welcome to post in my YouTube comments. Thank you so much. Once again, have a blessed day.